Namaskar and a very good evening to all of you. I am CA Neha Fadke, Treasurer of Pune branch of ICAI. On behalf of IASB, in absentia, CA Chandrasekhar Chitare sir, CCM and Chairman of Internal Audit Standard Boards ICAI, CA Ravi Kumar Patwaji, Vice Chairman of Internal Audit Standards Board in absentia too. All the officials of Internal Audit Standard Boards. I welcome all the participants and our esteemed speaker for this webinar CA Piyusha Umesh Limaye. I welcome you all on this webinar on internal controls, a paradigm shift. So, traditionally, if we talk about internal controls, we normally talk about checklists, procedural safeguards, or compliance mechanism. The primary purpose of which was to prevent errors. But today we see a rapid digital transformation in the organization, complex regulatory expectations. So our role as internal auditors is definitely changing. And internal controls, although is a backbone and effective governance, risk management, and compliance, but it should definitely not be limited to checklists. So today's session will move us from the core concepts of internal audit to practical application and also covering some risk-based scoping and responsibilities that matter. The speaker will also focus on a few best practices and real-life examples and critical big rock issues and how professionals can build their executive presence while driving these control mechanism. So, before we start our technical session for the day, for the benefit of all the participants, I would like to introduce our speaker for the day. Uh, Piyusha Umesh Limaye, Chartered Accountant, is a seasoned audit and risk assurance professional with over 15 years of experience in risk management, SOX compliance, internal controls, IT audit, and internal audit. She is also, along with chartered accountant, she is also company secretary and holds a master degree in commerce and has earned prestigious certifications including CISA, CIA, DISA, and also French language level AI certificate from French Ministry of Education. So it is wonderful to know that this additional qualification definitely helps us to reach out to more organization. In her current role as director at risk assurance at EQ, a leading investor services group, Piyusha heads the second line assurance function, driving the development and implementation of a robust risk assurance framework across global operations. She is responsible for building and strengthening governance structures, enhancing internal control environments, and providing independent assurance to senior leadership and regulatory bodies. Her work ensures alignment with internal audit standards and regulatory expectations, enabling IQEQ to operate with resilience and integrity. Her corporate journey also includes many renowned names such as Uber, Evolent Health, Allscripts Healthcare, United Airlines, Marsh and McLennan, and Semantic Software, where she partnered with stakeholders across diverse business functions and geographies. Piyusha has consistently delivered meaningful results while building positive professional relationships. Beyond her corporate achievements, Piyusha actively contributes to the academic and professional community. She serves as a panelist of students' interviews at Symbiosis School of Banking and Finance, mentors aspiring professionals, and is a guest speaker and trainer for the definitely for ICAI, Information System Audit and Control Association, which is ISACA, and Institute of Internal Auditors. She frequently shares her expertise through webinars and institutions such as Galgotias University and Risk Pro India. So, Piyusha, I am very delighted to read your introduction, and I am sure that we will definitely have a wonderful session as with so much of rich experience which you are going to bring to this session. And as before we start our session, I would request the participant to listen with a strategic lens, because we can reflect upon our own organizations and audit engagements while we listen to the speaker. So over to you, Piyosha, and a heartiest welcome to you again, and all the participants. Happy learning to everyone.
Thank you so much, Neha madam. Thank you so much, Arun sir. I'll just give me a second. I'll just share my screen. Yeah, let me know if it is visible. The first slide.
Yes, it's visible.
Perfect. Okay, awesome. So again, thank you so much to ICAI, ISB, Neha Madam, Arun Sir for the warm welcome and the heartfelt introduction. So before we take a deeper dive into the subject matter, I would just like to spend a couple of minutes explaining what this means to me. And I think this is one of the best ways to end the new year and to end the current year and to begin the new year, because I've spent about 15 years in the same domain. So my experience, expertise has evolved over the years, starting with even my internship was an internal audit. So right from the time when we used to manually tick the invoices using those famous black and red pens to now automation, AI bots, lot has happened in these 15 to 18 years span of time. So what I'm going to discuss today is obviously going to be focused on the technical aspects of things, because we can't have a good session without touching upon the basics. But what I'm going to do is try to inculcate as much practical, I would say, my experiences as I can in this webinar, because those are really important. And even if everything looks good on paper, in reality, things are very different. And I think it's good for me to share what I have learned and also unlearned over the span of 15 years. So in terms of agenda, I think Neha madam touched upon it briefly. I'll just maybe just spend some time on it. So the first section is dedicated to obviously understanding what internal controls are, the definition, why are we talking about it, then again taking a deeper dive into some of the nuanced aspects of internal controls. Then I'm going to spend some time explaining to you what actually a control is and how you should create one. Because I think this is one of the roadblocks I have noticed in many organizations. Like, people don't know what good looks like, and that I think is the base of a strong internal control framework. Then we are going to again go a bit technical, but I'll try to explain it in as simplistic terms as possible. So it will be on scoping and risk assessment. Then obviously there are a lot of pillars on which internal controls rest. So I'm going to be talking about the key responsibilities which each one of these pillars, these stakeholders, and we as audit assurance hold. This fifth agenda item is going to be on best practices. So as I said, I have worked across different organizations. Each of them have been at different stages of maturity. So some of them were really best in class, evolved, mature, but most of them were in their initial stages of, say, SOX compliance or even building an internal audit or assurance function. So there are a lot of good practices which kind of developed over the years, which I would really love to share with you. Sixth is going to be on big rock items, things, domains we should be keeping an eye out for. Last but not the least, and I try to add this segment in every presentation I deliver, because 1 to 6 are of no use if you can't deliver exactly what you want to say. So you might do all the hard work in the world, but if your presentation, if your communication skills, your reports are not up to the mark, then all of it is off face. So the last section is going to be dedicated towards some tips and tricks to building a strong executive presence so that you and your function kind of stand out amongst your peers. So as I said, can't escape a little bit of technicality. So the first portion is dedicated to understanding what are internal controls. And if you look online or if you go into IIA or any other institution, there are a lot of different definitions available. I have tried to pick the one which is again very simple, but which captures the nuances of what internal controls actually are. So if you start with the first line, we are saying that internal controls are the policies, processes, and procedures designed to identify, assess, and manage risks. So just look at this sentence. It is worded so beautifully, and it kind of encapsulates everything which an organization does. So an organization definitely has policies. For those policies to be effective, they need to be translated into processes and procedures. And what is the aim, or what is the intention of all these three things?
Can I just interrupt, Piyusha? We are on the first slide itself. We cannot see the
Okay,
change.
okay. Oh, thank you for that. Just give me a sec then. Let me try sharing. I don't know what happened. Thank you for pointing that out, madam. Yeah, just a sec. Okay, can you see the presentation now? The entire presentation? Neha madam, I'm sharing my screen.
We have not, have you gone to the screen
Yeah,
slideshow mode?
not yet. Let me just do that.
Okay, I can see the what are internal controls, that
Yeah,
slide, I
perfect.
can.
Perfect, perfect.
Okay,
That is the second slide. Yeah. So we are on the right track. You do let me
okay,
know if anything of this sort
okay,
happens.
okay,
Yeah.
okay.
Okay, awesome. So sorry for the tech issue and my ignorance. So as I was saying, the first line I'll just maybe repeat it for the benefit of the audience here. So what I was saying is there are a lot of definitions available, but I have tried to pick out the most simple and the most wholesome one. So if you look at the first sentence itself, what we are saying is internal controls are the policies, processes, and procedures designed to identify, assess, and manage risks. And this one sentence in itself carries a lot of content because all organizations have policies. Those need to be translated into processes and procedures. And why do we have all of these? The intention is to identify, assess, and manage risks. So everything is related to risks. And we, as internal auditors or assurance professionals, first of all, need to identify. So I think that is the base of a good professional. You need to first identify the risk. You need to assess because not all risks need to be managed. So you need to assign a risk rating to that particular risk, understand if it needs to be managed, and then manage it. So this one sentence in itself is all encompassing. And the second point talks about we provide reasonable assurance. I think this is audit 101. There can't be absolute assurance ever. So we provide reasonable assurance that the organization achieves, first of all, its operational and strategic objectives. Now, again, a very simple sentence, but just to highlight on and expand on this is whenever we are working with any organization, right? Earlier, maybe it was kind of the case where internal audit assurance used to work in silos, but not now anymore. With the way organizations are scaling, with the kind of growth which is happening, the sheer complexity of it, we need to be very sure where our organization is going, what the business wants to achieve, and align ourselves according to it. Maybe just to give a simplistic example, right? There were like 5 acquisitions last month in my current organization. So when I am planning for my audit plan for the next year, these acquisitions will be top of my list, and I knew of this beforehand because I was in discussions with my CEO and CFO. So just understanding in what direction the business is headed. I mean, again, to give again a simple example is this is about acquisitions. Say, for example, your organization is going to have a takeover. In that case, there will be a lot of due diligence which will be conducted, which requires you to be proactive. And that is the way you can actually be a good assurance or an audit professional when you work hand in hand, when you partner with the business. So you essentially help the business to achieve its objectives. The second talks about producing reliable and timely information. It is both financial and non-financial. And again, this is very, very simple, very self-explanatory. Just to give a good example, we have the 10K. So organizations which are listed on the SEC, uh, we have the 10K, we have the balance sheet, obviously, we have all the financials. We as auditors make sure that each of the figures on those financials are true, complete, and accurate. And we are the reasons investors can invest in the company. Clients are assured of the credibility of those financials. So just to give you some appreciation on the fact that the work we do, sometimes it may feel that it is not as momental as, say, any revenue generating person or a team, but it is really extremely important. The last two again are, I think, fairly straightforward. So complying with laws, regulations, internal policies goes without saying. That is the reason we have internal controls in the first place. If I have to sum it up, I think there are three core elements on which internal controls rest. One is obviously policies, one is the control activities, and we will be talking a little bit more on that in the subsequent slides. And obviously, risk assessment. I think this is the most interesting, exciting, as well as I would say the most complicated of all the entire process of internal controls. And I won't spend much time on it because we are going to take a deeper dive into each of these sections in the subsequent slides. Neha madam, you can see the third slide now, right? Why I talk about internal controls? Just confirming.
Yes, I
Okay,
can
great,
see.
awesome. Great. So why talk about internal controls now? Obviously, they have always been important, but as I just touched upon in the previous slide, a lot of things are happening, and I've just listed four, but I think there are many more. I mean, I can spend like 3 hours just talking about why this is important, but I'll just touch upon the main topics. So first of all, there is increased regulatory scrutiny and complexity. And just to again give a very real life example, I'm working with IQEQ, which is obviously a multi-jurisdictional organization, and each jurisdiction has its own regulatory laws, regulations, and its own specific nuances. And the regulators now are not only interested in looking at policies; they really want to take a deeper dive and understand how that policy is being implemented. You might have the best policy in the world. Everything is beautifully drafted and everything looks good on paper. But they are more interested in understanding how that policy is trickling down to each of the different teams who should be working on that. And more often than not, this is one of the roadblocks I have noticed, that things are good on paper, but when it comes to implementation and sustainability, that is the problem which many organizations face, which obviously leads to regulatory scrutiny, complexities, fines, and whatnot. The second, again, is rapid business growth and operational scale. As I mentioned, we had 5 acquisitions. We are looking to acquire more, and that is the story of every other organization. The way in which organizations are acquiring businesses, expanding their business lines, we should have strong internal controls to make sure that these are sustainable and nothing falls out of place. I mean, just to again give you again a real life example, I was working in an organization and we had a massive acquisition. In that, we acquired I think a application known as Aldera, which was a claims processing system. Now the problem was that because of the speed at which that acquisition happened, nobody really bothered to check on the access rights of that particular application. So the application was inherited, and all of the users for that application were given admin rights. The operations aim was simple: to make sure that claims are processed, work is done, and revenue is generated. But a problem happened was because of this hasty decisions and because there wasn't a strong internal controls check over that particular acquisition and that application, it led to material weakness. Now, anyone who is familiar with the SOX world, they know that the material weakness is a horror story. It took us about a year to remediate that. And the funny part about a material weakness, digressing a bit, but I think this is important for everyone to know. So when we say we have a material weakness, it doesn't necessarily mean that a breach or a fraud has happened. Even if the auditors, the external auditors suspect that there is a likelihood that such a fraud or a lapse could occur, then it is bifurcated as a material weakness. So even the possibility of something like that happening could lead to your organization really suffering. And when you have a material weakness, it is noted on the 10K. So if anyone reads your 10K, that is the annual filing document, they can actually see that this was a material weakness and we are still remediating it. So along with all the different problems which arise, main problem is the reputational damage which all these issues can lead to. So that is why it's important to have strong internal controls in place and just keep an eye out, like what is actually happening, what are we acquiring, when is that acquisition going to happen. So all of these things are very important. Third, I think is something which all of us are talking about, reading about every other day. So digitization, automation, they have really simplified our lives. I won't deny that. I mean, if I look back to like even 7 8 years back, and the situation where it is now, a lot has improved. But when you are introducing any sort of automation, when you are kind of automating any process which used to be manual, then it definitely leads to a lot of risks as well. And we as auditors need to step up and understand these new risks. So that's why even new as automation, digitization, and all these things are increasing, the risk types also evolve, and we should be able to match our pace with those. Last but not the least, greater accountability on management and boards. So leaders nowadays are not only expected to, they are expected to maybe part. So the way I explained, we are supposed to partner with the business. In the same way, the business is also supposed to partner with us. And if this partnership should work from both ends, then only I think we can have a strong internal controls framework in place. Now again, coming back to the SOX world, the Sarbanes-Oxley world, if you have seen the 10K, and I would highly recommend you to have a look at that. It is signed by the CEO, the CFO, and the external auditor. So there are three parties actually attesting to the reliability, completeness, and accuracy of the financial statements or whatever disclosures are there on the face of that like 108-page document. I mean, when I was implementing the SOX compliance program across, I think, a couple of organizations, the way I used to explain this, and again, this is not exaggeration, but the way I used to explain this was, if you don't do your job well, and this was mainly for the stakeholders, if you don't do your job well, then your CEO and the CFO will go to jail. And this is not an exaggeration of any kind. There are criminal penalties and there are legal penalties as well. So yeah, so that is the reason we are talking about this now, and we will be talking more about this in the coming future as well. Moving on, again, a little bit technical, but I think this is important for everyone to know. So if we talk about the bifurcation of internal controls, right? Now there are hundreds of ways in which controls could be bifurcated. But I think this is one of the main distinction, especially if you are a listed company, then I think you will come across this terms frequently. That is key controls and not key controls. So what is key control? Again, trying to simplify it as much as possible. A key control is must have, and a non key control is good to have. I think that is the best way to explain this. You can read the technical definition on screen. It is quite long, so I won't read that aloud. You can obviously refer back to it as well. Just to give an example, right? So if we talk about a typical new hire control, so whenever there is a person who is newly inducted into an organization, then all of those accesses require appropriate approval prior to granting access. So very simple, basic control, but it is a key control. Now, if we just take the same scenario, what could be a non-key control in this case? Just an example of that is management performs assessment on terminations to see if any term user has access after the termination date. So this is a non-key control. It is a good to have control, but not a must-have control. Now the question always arises that if you're talking about key controls and non-key controls, then what do we as auditors need to test? So your focus should always be on key controls, because that is something which is mandated by SSC. That we need to test the key controls. However, that doesn't mean that non-key controls don't have to operate. And that is the message which you have to give to your stakeholder. Because typically, when you prepare this risk control matrix, you send the list of controls to them. Like once they have formulated it and you have bifurcated it, obviously based on mutual communication and discussions, the question always arises is, so should I only performing the key control, because you are not going to test the non-key control as it is, right? And that is when where you have to shift the narrative. The control may be key or or non-key. The only difference which it should make is on the documentation side of things. So the key control should definitely have more robust documentation, but it doesn't mean that a non-key control should not be performed. So non-key control should definitely be performed, could be a little bit more light on documentation because we are not going to test it. Like we as auditors, we won't be testing it. So this is the message you have to communicate to your stakeholders, that both sets of controls have to be performed by you, but we will be testing only key controls. Another caveat to just caveating to this, and the point to remember is you should do a regular assessment of your key controls and non-key controls. Like you have your risk control matrix. You will be starting with that exercise. I would say in January. By February, you will be finalizing that. Once it is finalized, I can guarantee, and this is for all organizations across, irrespective of scale, the bifurcation won't remain constant. So there will be incidents throughout the year, there will be changes in the business, and a lot of things which will maybe necessitate a non-key control to be a key control. Some of those controls might get decommissioned as well. Some of those might be completely scrapped off. So it's important to kind of do I would say a reconciliation or a reassessment of your bifurcation and make sure that the bifurcation is current. And again, just to give an example, right? You have an application, say Workday, which you are using for your HR payroll practices. And one day the management decides that that application is too costly for us. We are introducing another application in its place. We are decommissioning Workday. In that situation, all the controls related to Workday will be deactivated. So you need to make sure that that business decision is reflected in your risk control matrix as well. So just one important point to remember here: reassessment, realignment, and continuous communication with the business to understand what actually they are doing, so that your risk control matrix and your control bifurcation remains constant. Moving on, I think this is a important and interesting slide. So old versus new control mindset, right? As I said, I have been auditing controls and doing everything related to internal controls since a long time. And 15 years may not be that long a period of time, but I have observed a lot of things which have changed over the years. So these are again some of the things which I have noted or which I have observed, obviously based on my own experiences and also discussion with peers in similar industries, seniors, juniors. So if we talk about the first point, we are saying that traditionally internal controls were more compliance driven and rule based, and now that shift is completely on a risk driven and principle based. Now, what does this mean, right? It sounds like a lot of words. I'll try to simplify it as much as possible. Now, again, taking a real life example, we have a so if you are a part of any financial services organization, you will agree with me that client onboarding is one of the key pivotal processes which all these organizations have. Similarly, we also have a process for client onboarding, and it's a very detailed process. Like, how should a client be onboarded? What are the measures? What are the due diligence techniques you should apply? So one paradigm that says that depending on the risk profile of the client, you are supposed to apply enhanced due diligence, simplified due diligence, and make sure that it is updated in the SIR. So SIR is nothing but our ultimate system of record, which has the ultimate client rating, which we give. Now, this is just a simple statement, right? So, if I look at it from a compliance and a rule based point of view, my understanding of that will be pretty limited. Now, if I apply a risk based approach, what is that paragraph trying to teach me? Or what is the greatest risk? Say, for example, I don't do this. If I don't do this, then the risk is that clients might be onboarded without the right level of scrutiny, which will lead to a lot of financial crime risks materializing in the future, which will be detrimental for my organization. Now, when you ask this question, right, naturally the next question comes into effect that, okay, the client which are onboarded initially didn't have any specific risks, and the due diligence which I applied was simplified. I didn't go the extra mile because it didn't satisfy the enhanced due diligence criteria. But what if 6 months down the line, there is a specific incident which happens? Say, for example, the client is affiliated to a terrorist organization, just giving an example. Then, in that case, how do I make sure that the risk is assessed continuously? So, you see, the way we are looking at a simple paragraph and understanding the risk behind it, it will lead us to creating a better control environment. And that is the way you should always I would say read even policies. So when I joined this organization, again giving a very recent example, I was just given a set of policies and told that okay, audit them. Now the policies are policies; they don't have the risks attached to them or written to them. But what we did as a team was we sat across the table, took each of these different paragraphs, and tried to understand what risk could materialize if that particular process was not followed. And when we start asking these questions, naturally the answers which we get are our controls. So that is just on the first point. Second is on second talks about the earlier focus was on documentation, but now organizations, the board, the regulators are more focused on outcomes and effectiveness. And maybe just to again give a simple example, right? Say, for example, there is a termination control, and you're noticing that uh, there are 3 to 4 people who are not getting terminated on time, and this is happening every other month. And the organization is taking care, like they are taking proper approvals afterwards and making sure that the person is terminated. You have the screenshots from the system telling that, okay, the person was terminated on time. But what does this tell us, right? Are you achieving anything out of this? The solution here is to go to the root cause of this. The root cause, I mean, just giving a fictitious example. The root cause could be okay. There is a policy, but it has not reached the contractors. So all these problems which are happening related to delayed terminations are only for contractors. So when we look at the root cause behind any control, or any issue which arises, then it helps us to focus more on outcomes and effectiveness. Third is on the distinction between detective and preventive and detective balance. So whenever you are designing a control framework or you are auditing a control framework, it is prudent to look at what is a mix of detective and preventive controls. Obviously, I'm not saying that detective controls are redundant. They are extremely important because they are the last, I would say, gate before which the situation could become an issue. But just take into consideration what is the mix of that, and could we do anything to increase the number of preventive controls so that the issues don't falter or don't occur in the first place. Again, taking an example from the earlier slide, which I was explaining, right? Like we have a solid terminations control, then maybe the dependency on the user access review control reduces. So I think that's very important to keep in mind. The fifth one, I think, periodic testing cycles and continuous ongoing monitoring. I'm pretty sure all of you must have read about this or discussed this in your organizations as well. Like earlier, maybe the testing cycles were less frequent, but now with technology, with automation, with good tools, we are stressing more on continuous or ongoing monitoring. Like if a risk materializes, then we can mitigate that in real time as opposed to waiting for a long time before it occurs. The second last one talks about siloed ownership with control functions against clear business ownership supported by assurance. And I think this is a shift which I have really observed. I mean, earlier it was like everything is our responsibility, right? Like we are supposed to maybe be the whole and soul of internal controls. But over a period of time, as the management has evolved, it's the shift is slowly moving from us to them. So we can support them, we should support them, but it should be very clear right from the beginning that it is their responsibility, it is their internal control framework. We are here, I would say, as strategic partners or critical friends, and that is what our role should be, as opposed to we doing everything for them. Last but not the least, I think again pretty self-explanatory. Earlier, we did have a lot of manual people-dependent controls, which are still there, and if you ask me, they should be still there. But now, again, due to automation and system-enabled controls, things have become much more efficient. But again, it requires us also to adopt, I would say, creative ways to review or audit controls. So this section, I'm going to be taking a deeper dive into internal controls. Now we have seen the core definitions, what it means, the bifurcations. But if you again distill it down to the most simplistic thing, right? How do you create a control, or how do you know the control is well worded, or what good looks like? And that is what I was referring to earlier. That in many organizations, I've seen controls not being worded properly, and If a control is not worded properly, then it obviously, because again, if a control is not worded properly, it won't be executed properly, leading to a risk of obviously issues and more serious problems occurring. So again, this is something which I have devised, and I think this will be beneficial for everyone. Again, based on my experience. So whenever you are creating a control or when you are reviewing a control, there are a lot of questions which you need to ask. So first of all, is the control which is created mitigating the risk which is identified? And that is for first and foremost. So we perform a risk assessment, we identify certain risks. uh, that risk should be properly mitigated by the control which is being formulated. Once that part is satisfied, then the following questions can occur. So firstly, who is performing the control? That should be very clear. So who is the preparer? Who is the reviewer? Uh, are there different layers of preparers and reviewers? All of that should be mentioned in the control. Why is the control being performed? I think this is key. Like why all of this is happening, purpose, what is being reviewed, when is the control being performed? Again, answers your question of timeliness. So it is the control is happening on a daily basis, on a monthly basis, before month close, before quarter close. It can be anything. What is the control trying to achieve? Like what exactly are we trying to achieve through this control? What is the end result, or what is the end deliverable which this control is expected to achieve? Where it is being documented? So again, it answers your question of what where it is being documented, because if you're an auditor, nothing can work without documentation. So this question also will be answered, or rather should be answered in your control. Define thresholds and avoid ambiguity. So I've seen a lot of controls which are quite vague in the way they are worded. So whenever you are creating a control, make it watertight. Don't leave any room for judgment or for any person to interpret it in a different way. Like if I am reading the control and if Neha madam is reading the control, both our interpretations should be the same. That is the way a control should be worded. So avoid ambiguities. Now, I would say in about 50 to 60% of the controls, we do need to reference to certain thresholds, like, okay, something about 100, above 100K, something above 200K. So all these thresholds should be proper. A couple of things to remember in this, and maybe shifting a little bit away from the topic, is whenever there is any change in the business, you need to make sure that the trickle down effect to the control is being properly changed. So, say for example, there was an expense policy, and earlier it had a threshold of say $1 lakh. Just giving an example. Now there is a change in the policy, and the threshold has been increased by say X amount. You need to make sure that that change is being reflected in the policy or procedure documents and also in the controls. So again, I'm just repeating myself, but I've seen this happen a lot in my career, that things are changing at the management level, decisions are being made, but policies are not being implemented and controls are not being changed. Uh, Again, another scenario could be that policies are being changed, but that change is not getting reflected in my control. So just make sure that whenever any major or even minor change happens, you should be the first ones to understand whether it is affecting my internal control framework and whether anything needs to change. So keeping this constant eye out on things which are changing, that is very important whenever you are creating and more often refreshing a control. Another thing which is important to remember is that there are certain assertions, financial statement assertions, and this is more for the financial controls. So these assertions sit at transaction level, account balance level, or presentation and disclosure level, and you should make sure that your control or a group of controls is satisfying that. It might be the case. It will not be the case that a single control is satisfying all of these different assertions. But when you group the controls, say for example, you take a process procure to pay, you should see that okay, all the 10 controls, they are jointly satisfying all the assertions at that particular FSLI level. So again, an important point to note, but more so for the financial controls only. Here I've just tried to give a couple of examples, and for again, both of these are real controls. So these are not made up. These are actually taken from the risk control matrix from one of the organizations I was working with. So first is the control on revenue reconciliation. So what are we saying? I'll just read the control aloud for everyone's benefit. On a monthly basis, within 7 days of the month close, the revenue manager reviews the reconciliation from Aldera to Oracle prepared by the revenue analyst. This review includes, and there are 5 points, you can read that itself, and what is the risk it is mitigating, and these are the assertions. So if you look at this control, and what I have tried to do is I have tried to ask certain questions. Now, if you recall the first slide which we discussed on the questions which should be asked. So each of those questions is being answered in this question. So again, whenever you are reviewing a control or when you're creating a control, ask this question. So here we are talking about on a monthly basis. So when is being answered, who the revenue manager, what that is detailed, and what does the review include? Again, a detailed description. And again, in some controls it is applicable. What if, like what if there is an escalation, that an outlier, it is further investigated, and the risk it is mitigating very clear, and the assertions which are being satisfied, that is accuracy, rights and obligations, occurrence and completeness. So that is the way you should dissect a control and make sure that it is wholesome. I think that is the best way to describe it. There is no room for ambiguity here, and there are no thresholds involved, so there is no question of that as well. Moving on, so this is again more of a non-financial control. So this is talks about enhanced due diligence measures, and I'll just read it out aloud for your benefit. So we are saying here that the local cluster applies enhanced due diligence measures to high-risk client relationships to assess the risk after the standard due diligence procedures have been completed. This assessment is documented in the serviced entity's file and reviewed and approved by the client services director. So again, we are asking the same questions. Who is performing the local cluster? What is being done? Enhanced due diligence measures are being performed, why it is being done, and where it is documented. And again, we have the what if situation also in this case. So again, the same logic. I mean, you can take any control. I can go on and on about this and dissect a control. But I just wanted to give you a brief overview on how you should review a control, because uh, this you there will be instances where you will be asked to review the internal control framework, or you will be asked to actually design controls. And I think this rule of thumb is very important for everyone to understand, and this has come with experience. So initially when I sat down to review and to create a control, I really messed it up, but I think you learn some things the hard way. So this is one simple way of understanding or making sure that your control is foolproof and it leaves no room for errors. Moving on, I think I'll touch a little bit upon this, and this is more on the scoping and risk assessment part of things. So, this is mostly for the SOX processes, and there are various ways to actually scope, but I think this is one of the most simplistic and the most commonly followed practices which we do. So the first step is determine the materiality. Now, what is materiality? Materiality is nothing but a threshold that is used by management and the company to assess the magnitude of omission or misstatement. That is again the technical definition. If I have to explain it to you in simple terms, it will be just the tolerance to error. It is the maximum threshold or the tolerance to error which the organization can sustain. If anything goes beyond it, then that possesses a risk. And there are various ways to calculate materiality. Again, it will be too complicated, so I won't go into that. Typically, it depends on where your organization is in terms of maturity, and obviously discussions with the board, the management, and the external auditors. So you agree upon a number. It could be say 6 million USD. Just giving a random example. Now, once you have decided or determined that okay, 6 million USD is the amount, then the next step is to determine the financial statement line items and the trial balances impacted. So again, a very simple exercise. You take your balance sheet, you take your P&L, you take this specific materiality thresholds, the 6 million which you have identified. You apply that to each of the account balances, and anything which goes beyond that account balance, that will be in scope. So again, a very simple, simplistic way to do that. So that is step two. Step three is determine processes against the balances. So once you have determined that okay, there are like 50 accounts which are in scope, you can't audit an account, right? So that account will have to be mapped against certain processes. So that is step three. Once you finalize the processes, then I think so. Basically, the intention behind showing this slide is how we are arriving at internal controls. Because again, if you don't know the origin from where the scoping starts, then I think you won't gain the entire picture. Like you won't be able to appreciate the fact of how things are changing and how it affects the way you perform your internal controls. Sorry, digress. So step three, we spoke about determine processes against the balances. Once you have determined the processes, then you will determine the controls. So you determine which controls should be mapped to it. And obviously, it depends. I mean, some controls could be in place, some could be new. Completely depends. Typically, when you are scoping, firstly, it starts with the financial processes. I mean, it starts with the financial process, and then you see what are the system dependencies on these controls. So, the system dependencies are of three types. So, first are the ITGC controls or the GITC controls, and uh, I'm pretty sure all of you must be familiar with it, but just to give you a brief on what are ITGC controls, right? So ITGC controls are controls which are common to all the applications. So you take any applications, you take say Oracle. So the ITGC controls are user provisioning. How is a user being entered into the system? User deprovisioning. How is a user being eliminated from the system? Like when a user is terminated, when a person leaves the organization, then how is that managed? The third is user access reviews, and this is again a very, very important control that is on a periodic basis, and it depends upon organization to organization. So say for example, on a quarterly basis, uh, all the user accesses are reviewed by their managers to make sure they're still current. And the intention behind this is just to make sure that any person who shouldn't have an access is not having an access. Like there could be an instance that a person has changed his department or a person has left the organization, and for some reason his access was not revoked on time. Then there is a risk that this might be misused. So just to make sure that all the accesses are current and they are with the right people, a user access review is conducted. Again, a very important control. I mean, again in my experience till date, most of the issues which arise are in the user access controls because people don't have proper knowledge about it, and we can discuss that in the upcoming slides as well. The second part is the ITAGs. So ITGCs are pretty simple because you take any application in the world. It could be the most simple or the most complicated application. These 4 or 5 set of controls will remain the same. ITAGs are a different beast altogether. So ITAGs are the IT application controls, and they depend upon how you are processing, how processing happens. I mean, again, to give a very simplistic example, right? There is a application which is processing claims. Then it completely depends on the thresholds which you have, the timelines which you have set in place. So you code the application in such a way, or you prepare a job in such a way that it caters to your organization's need. So that's why it's very complicated to audit or review ITAGs, and it does require a certain level of technical expertise as well. Whereas ITGC is not so much because it is pretty straightforward. So that's why when I was working in Uber, right, ITGCs was something which even the business auditors could review. But when it came to ITAX, we had to onboard engineers because we don't have that level of expertise. Like we as chartered accountants can't review codes. It would be great if someone has that knowledge, but technically or traditionally we don't have that. So again, ITAX are quite complicated and very important to review as well. Because again, taking Uber's example, right? Just for everyone's, this is just something interesting fact to share. Like whenever we book a cab, right, till the time we like step away from the cab, a lot of processing happens in the back end, and none of it is manual. So all of it is automated. There are sophisticated applications working in tandem right till the point of revenue generation. And till you are actually in the system, you won't be able to understand or appreciate the fact and I would say the effort or the hard work which goes behind maintaining these applications. So again, those are ITAGs. Last but not the least, IPs. And I have a slide on IPs because they are very important. So these are essentially system reports or any report which comes out of a system and which we use in our testing. So these three things are primarily related to the IT side of things. Again, I think this is just a simplistic way of explaining things, and maybe just stressing on the fact that everything starts with the business processes. That's why if you see this diagram also, we are talking about the financial statements, that is the balance sheet, income statement, other disclosures. The second step is the significant financial statement line items, and the third step is the business processes. Now, from these business processes, there will be two branches, as you can see. So one is obviously the manual activities, and one is the systemic activities. When you talk about manual activities, there are manual controls, business controls. Systemic activities, as we discussed, we have the IT general controls, we have the IT application controls, and we have the IPs, and obviously the automated controls as well. An interesting segue to this is the mixed controls. So some controls are a mixture of automated and manual controls, and I think those are most more challenging to review or audit because they kind of have both these elements together. And I think these elements have increased. I would say these kind of controls have increased over the years as well. So yeah, it's pretty important to understand the business processes and which activities are manual, systemic, and which are a combination of both these elements. This is again an example and a real life example. I've just snippeted it for your benefit. So if you can see, we have the balance sheet here. We have the current assets, the cash and cash equivalents. We have the accounts receivable. We have the specific amounts, and the materiality which is decided is 6 million. So as you can see, everything is above that. That's why both of them are in SOX scope. The second is the SOX process area. So again, I mean, this is just one example. It could differ from organization to organization, but cash and cash equivalents, say for example, we have a process known as cash management, and then accounts receivable, we the process which it relates to is revenue, and the IT application which is related to both these um, uh, processes is Workday. So you can see, like when we determine the materiality, it's very easy to understand and very easy. Like if it's a very structured process, and that's why I really like this form of scoping because it's very structured and it follows a specific sequence. So you decide the materiality, you apply that across, you decide whether it is in SOX scope or not, you assign the process area, you have the IT application, and then you look at your internal controls. So very structured, streamlined process. Again, an example, but just taking the profit and loss account into consideration. So this is the month over month balance, and it is annualized, as you can very well see. In this case, there is only one account which is in scope, which is salaries and wages, and the SOX process area is HR payroll, and I think the IT application also was Workday in this case. So again, a very simplistic method which anyone can follow and which is used in most of the organizations. So most of the organizations I have worked with, this process has been followed. A point to remember, I think this is very important, and this is somewhere where automation can really help us. Now, all these amounts are fixed, right? Like again, I take the balances as of 31st of Jan. I perform this beautiful materiality exercise. I decide my SOX scope. I decide the SOX processes. I have my internal controls. But definitely, there will be changes along the year. So there will be instances where, again, the balances will go up, down. Some of these accounts might be decommissioned. They may not even be in existence anymore. Then in this case, if we can use automation to the best possible extent, like you could develop an app or you could have a bot set in place. When it takes all these figures from the latest financials, it actually applies this formula and just gives you the final process areas, and then you can work on the internal controls. So that is one area where I feel, and I didn't have that. Like this is quite an old example, and I wish that we had automation, because automation that time we didn't have anything of that sort. So all of this had to be done manually. But again, it's a good example of how we can up our game. I think that is what we should be doing. So automation can definitely help us here. You just need to make sure that you are creating the bot or designing the bot in the proper way so that the right figures are captured from the right sources, and the final output which we are receiving is proper, complete, and accurate. We'll just touch a bit upon IP as I had promised, and the reason I am giving it, dedicating an entire slide to it is it's extremely important. And I'll be honest. I have heard various definitions from various people and various leaders, peers everywhere. But again, based on my understanding, I think there are three primary types of IP. I'll maybe explain the types of IP first before going into the definition part of it. So first could be a manually prepared file, say for example a key spreadsheet. The second one I think all of us are familiar with. It is a system generated file. So again, taking Oracle's example, right? You're taking or downloading a list of invoices directly from Oracle. Then that is again very simple and very straightforward. The third, I think, category is very interesting. So it's a combination of the first and the second. Again, to give you an example, say for example, we have an HR payroll system, and we are extracting, say, the list of employees from that. But it doesn't stop at that. Say, for example, it has only the list of employees, and the list of contractors is maintained in a different application. So now we have two lists, right? We have one list which is coming from that HR payroll application, one coming from the application which has the contractor details. Now someone needs to manually copy paste. Again, if you want to see which of these have been terminated, then you need to maybe refer to another system which has the termination date. So here you can see like the complexities of that report have really increased. So whenever you start with any review, and I think this is again a very simple but a common mistake which I've seen people do, especially in the initial years of their career, like you receive something, you receive a extract, you receive a population set, you immediately start with your sample selection, you apply sophisticated sampling techniques to it, and just request evidences. Good practice is to just take a deep breath, take a step back, and ask from where is this being generated. Like I am getting an Excel sheet, but how do I know that each and every figure, each and every name on this particular Excel sheet is complete and accurate? And the best way to do this, and I think this works really well, is whenever you are starting with any audit, right? And especially if you don't have access to that application, like if you have access to that application, sometimes they do give you access. But say you don't have access to your application or it's too complicated for you to operate, then the best way is to schedule a call with the stakeholder, record that call, and ask them to extract that specific Excel file in real time. So you can actually see how that report is being extracted. What are the parameters which are being inputted? What is the date range? Are there any exceptions which are there? So it's very important to understand where the source data is originating from. Because if you don't, if the population is faulty, right, then however good your sampling techniques are, your internal controls might be really sophisticated, your report might be the best written report in the world, all of that loses credibility. So that's why an IPE is really important. Why it's important? So again, I've written that down. Key reports must be accurate, complete, and reliable for effective control execution. Very simple. Testing procedures, we have discussed that. So logic needs to be preserved. As I told you, right? You need to be very sure what is the logic which is used to actually generate that file. In some instances, it might be easy. In some, it may not be, especially if the system is really complicated. Then you might need to take the help of an expert to actually understand what is the code which is created or the trigger which is actually generating that report, especially if the report is complicated. It's good to do that. I think that's a good practice. You can work in tandem with experts and vet that against the logic which you expect. Obtain and review the audit trails. So what happens is in applications like this, changes also happen. So it's advisable to get a list of the changes which went in that application and review them and try to understand if those changes were material enough to alter the very basic nature of that report or the output which you desire to be. So that's very important. Second, as I already mentioned, change management and audit trail, completeness, accuracy without doubt. And a very simplistic way of doing this, I mean, this is, I would say, audit 101. So, whenever there is, say, for again, taking Workday's example, because I think it's one of the most user friendly systems which I have used. So, you input certain parameters, you take a screenshot, You count the total number of rows. So 100 employees, the data of 100 employees is being exported. You export that to an Excel sheet. You make sure that, okay, the number displayed on the screen is the same number as is on the Excel sheet. You also do a accuracy check. So this is completeness. Like, you can't say that that population is 100% just based on the completeness part of it. There could be very well instances where the count is matching but the details are not. So advisable to take a couple of samples from that which were displayed on the screen and those which are there in your Excel sheet, and make sure that those are matching. Again, one good question, last but not the least, is to ask the stakeholder or the owner of that application is who has access to change the source code for this application. Like, who are the people who have admin accesses? So it's very important to review these applications in detail. And again, repeating myself, you may not have all the knowledge. You are not expected to have all the technical knowledge related to system controls. If you have, that is amazing. If you want to gain it, amazing. But if you don't have, make sure that you ask the right questions. If you ask the right questions and take support from the people who are experts in that field, then definitely your audit will be a success. Again, speaking from experience, again, this is one of my favorite topics because I have seen a lot of variations of it. And this is a definition which you can read on the screen. It is quite detailed. I'm not going to read it out aloud. So what we discuss right now on the scoping part of things, that was more on the quantitative decision making. So we spoke about materiality, which is pretty straightforward. Like, if I do a review, if anyone else does the scoping exercise, the answers which we get, even if a bot performs that scoping exercise, the answers which we get are going to be the same. The fun lies in the qualitative factors, and those are really, really interesting. So risk assessment essentially uses a lot of factors. So it depends upon organization to organization. But the intent is to categorize your process, account, IT application into various risk categories. So the risk categories are typically, say, high, medium, low, and I think this is followed across. Some organizations also use like very high, high, medium, low, very low. So it depends. But I'm going to again try to make things as simple as for you. So we will say that it is high, medium, and low to determine the extent of testing for this particular process, account, and IT application. So on the qualitative factors, as I said, there are a lot of factors. So it could be nature and subjectivity of the account or disclosure. What is the extent of loss due to errors or fraud? Are there any accounting or reporting complexities associated with that particular account? What is the volume of activity and transaction processing? Any changes, any prior issues, fraud risk, IT environment? So the list can go on and on, honestly. I'll try to again simplify it for you. So I've just taken four, I would say, major factors here. So first one is the susceptibility of misstatement or loss due to errors or frauds. And what does that mean is that that account has a greater likelihood of errors or frauds due to the nature of the associated processes. So it could be the number of employees, it could be the number of handoffs, there are a large number of high risk issues identified by internal audit, external audit assurance in the previous years as well. A good example I can give regarding this is say, for example, a process known as order to cash. So Uber, my previous organizations, had acquired a company known as Transplace, which was essentially a freight company. So we used to make sure that goods are delivered from A to B. I mean, just again, trying to explain it in layman's terms. So for that, we had the account order to cash rated as very high, and the reasons for that was there were a lot of handoffs in it. It was very manual. So the number of handoffs which happened between teams in that entire process were too many. Along with that, there were a lot of manual controls. Second is the fraud risk, and there were recurring instances of fraud wherein goods were not delivered but they were recorded. So because of these reasons, we kind of allocated the rating of high to that particular account. But again, it completely depends on the organization you're working with, because the revenue model for an organization could be simple or complicated. So It's not right to say that anything associated with revenue would be a high. It could be, but also may not be. So just giving that disclaimer. Second is accounting and reporting complexities associated with the accounts. And a good example of that is IBNR. So it's incurred but not received. So that is typically used in insurance companies. And that is a kind of account which uses a lot of estimates because it depends a lot on actuarial assumptions, which are very complicated. So in that case, because of the sheer complexity or the new accounting requirements which keep on changing, we will allocate it a high rating. Again, this is just one example. If you take something very simple, then this rating might change as well. Third is the IT environment. Say for example, there is an application which everyone uses. There are a lot of users with privileged accesses. Like a lot of people have admin accesses or elevated accesses in that. SOD is key. So SOD is nothing but segregation of duties. And the question to ask is, what will happen if the SOD is doesn't work properly? Will it really lead to control issues? If the answer is yes, then it will definitely move up a notch. It will be a high rated one. There are frequent changes to that application. So that application is not static. A lot of changes keep on happening, like because of the, I would say, the volume of transactions or its importance to the business as a whole. A lot of changes keep on happening. And whenever changes keep on happening, definitely there is a change in the functionality which we as auditors need to review. So naturally, it will get a high rating. Key reports or IPs. As I said, if there are a lot of key reports or IPEs being generated from that particular application, it naturally becomes key. I think this is pretty self-explanatory. Last but not the least, we are talking about changes from the prior period. So, say for example, the process is quite new. And a good example in this case would be an application which we inherited in an acquisition. And it is the first year we are auditing it. The application intrinsically might be very simple, but it is not part of our legacy suite, right? So that is the reason we have to be more cautious around it and make sure that it is audited properly. So this mere factor will again take it to a higher rating. Another example could be there is a large turnover in the process or the control owners. Like uh, process could be simple. It could be as simple as say HR payroll, right? But you notice that in the last year there have been four different head of HR, head of human resources, and a lot of turnover has happened. Then whenever turnover happens, obviously there is a lot of stir which happens in the organization, and the new people takes not a lot of time, but they do take considerable time to adjust to the current control environment. Because first of all they have to understand the business, understand their duties, and then they will think about controls. So whenever there is turnover and there are handoffs happening, there is a very high chance that errors or frauds might occur in that period. So again, that is the reason which will elevate that particular account or application to a high rated. If documentation is not in place, I think again very simple, right? Whenever you're auditing any process, if you notice that despite repeated requests, you're not getting the right level of documentation, or you're not receiving cooperation from the stakeholders, then out of, I would say, professional skepticism, you will elevate the risk for that particular account or process or even that application. One point to remember in the risk assessment is, again, I'm repeating myself, is it's very subjective. Like what I could perceive as high may not be perceived as high by someone else or in some any other organization. Another point to remember, the same way we discussed, right? The same way we discussed for materiality. It's also equally, if not more important, to assess all these factors on a continuous basis. So all these factors won't remain constant, they will change. So you as auditors have to, again, I'm repeating myself, but this is really important. You need to understand where the business is headed, what are the changes which are happening, and how they are going to trickle down to your internal controls. Whatever happens, your internal control framework should be a strong and should be relevant. So you can't operate in another world siloed from what is actually happening with the business. So that's why it's very important to partner continuously with your stakeholders, have discussions with them. And I would say that as you grow in your career, this becomes really important. Like obviously, when you start in your careers, you will be actually doing the testing, then you will be drafting reports, then you will be reviewing reports, right? But as you scale up the leadership ladder, I think what is important for you is to understand what keeps the CEO, the CFO, your stakeholder awake at night. Because gone are the days when we use the reactive approach. We as auditors need to have a proactive approach and assess which risks could arise so that we can have our controls well set in place before they actually arise. So I think that is very important. And all of that comes with time. So it's not something which will happen overnight. It will take its own time for you to even build that credibility and for you to understand and assess the risks beforehand before they actually occur. So again, I was explaining, right, this risk assessment model, which I described, that is from one of the organizations I'd worked, and now this is completely different. So as you can see, this is risk assessment model two. There are many models, I think I would say, but just for you to appreciate the fact that how this changes. Uh, so in the one of the organizations I was working with, which was a non-listed company, right? So for that, and it was a multi-jurisdictional organization with a lot of nuances. So each jurisdiction has their own specific nuances, their own rules and regulations. So the way we kind of assessed, I would say not risk assess, but more of priority assessment. So we decided on certain priority assessment factors, and those are listed below. So the earlier model which you saw, that was primarily on the account balances or the processes. Now this was more on the jurisdiction. So say for example, we have 32 jurisdictions all across the world. We took all of those and we applied the same logic to it. So regulatory risk. Now is that cluster or that jurisdiction regulated or it is not regulated? Now just notice the fun in this, right? Now this could be interpreted in two ways. Some people would say if it is regulated, it possesses a high risk, or someone would say if it is regulated, maybe it is not as high risk because they are used to regulatory inspections, so it won't be as much as a problem as some as a jurisdiction which is not regulated. So again, very very subjective. Second is management concerns, and I think this is very important. And again, referring to the point I was talking about earlier, you need to constantly be in touch with your stakeholders, with the chief risk officers, with the regional risk officer, just to understand, like, okay, what is bothering them. So that is one important factor. Previous assurance coverage. So say for example, I am finalizing the plan for 2026, and I've noticed that okay, we didn't do any review in say Mauritius in the last year, then definitely I can't be very confident that cluster is operating effectively. So naturally, it will get a high rated rating in my current assessment. Revenue, definitely the cluster which is contributing more, that will be high rated. The next is principal risk. So all organizations typically have their own risks set in place. There's a list of risks operating across the different operating across the organization. What you need to assess as internal auditors is what is the extent of principal risks that particular cluster could be exposed to, and more the exposure, higher the risk rating in this case. Now KRI is again a very interesting concept. So KRIs is nothing but key risk indicators, and it typically is dependent on the self-identified issues. So there are a lot of events, risk events, which happen throughout the year. Just to give an example, so there could be an incident where a laptop is stolen, right? A laptop is stolen, it contained confidential company information, and you are noticing that okay, at the end of the year, Mauritius cluster had like 20 of these high risk events. Then naturally, I will take up its rating by a notch. Again, this is just one example and one risk factor based on which we will be kind of allocating the reviews to the different clusters. Headcount, again, self-explanatory. The next is what is the percentage of clients, or what is the bifurcation of the risk entities which is being serviced by the cluster. So the bifurcation between high and very high. More high and very high entities as part of the total portfolio, more the risk obviously for that cluster. So again, self-explanatory. So this list can go on and on. So what we did with this organization was, based on this, we risk ranked the clusters and then we allocated the review. So this was a very interesting shift. So as I was saying, right, risk assessment is one of the most interesting as well as the most complicated as well as the most complicated parts of designing internal controls. Like, things could be, it could be very simple or it could be very complicated. Couple of key takeaways I would say from risk assessments is: make sure that it is scientific, make sure that it follows a specific logic. Because when you are explaining this to your board, when you're explaining this to, say, the steering committees or to the CEO, you need to be able to explain the logic behind that. The logic could be anything, but it should follow a particular pattern and a particular structure. And I think this is again something which comes with experience only. But again, very, very interesting and very important, because all of this is the basis, uh, on the basis of which internal controls will be designed. So if you understand this properly, then it will be a lot of fun auditing or reviewing a process as well, because you can see the end-to-end picture and you can see how are the moving parts. Like when the risk assessment changes, my internal control changes. So it's very interesting, and I think that's very important for everyone to know. This is again just a real life example, an IT risk assessment. I thought it was one of the good ones to explain. So you have taken the application known as Workday. It is an HR system, but it is also used as a financial ERP. So there are some organizations which don't use it only as an HR system; they also use it as a financial ERP. So because of that, if you can see, the first point here is process level risk, right? So the process level risk obviously is high because a lot of the key processes are kind of touching the Workday system. So a lot of transactions are being processed through Workday. HR payroll is there, then financial statement, book closure, that is also happening through Workday. So naturally, it will get a high rated ranking. The second is the nature of the system. As I said, it is a transaction processing system, as opposed to something which is maybe more of a customer focused, right? Like something which doesn't process transactions, that will obviously get a low rated one. But because a lot of transactions are being processed through this system, it will get a high rated ranking. Third, which we discussed, is reliance on key reports. So, key reports are nothing but the reports which we auditors and even the process owners use in their working. So, because there are a lot of them coming from Workday, it has been ranked as the highest. User accounts. I think each one of us has a Workday account, and in addition to that, the organization, again, this is a real life example. So the organization I was working with, it had a lot of privileged users also associated with it. So again, the next point is users with admin or user rights, and that is the reason it has been ranked high. Changes implemented. So a lot of changes happened in that application because it was the first year for that application to be operational. SOD, if the SOD fails, segregation of duties doesn't happen, then definitely there will be a control lapse. A lot of issues noted. So issues were noted not only by us but also by external audit. So that is the reason that overall risk rating is high. So again, if you can see, there is a very scientific approach to this, very, very scientific approach, a very structured approach which finalizes the rating. So whenever you will be receiving questions, like say for example you are preparing a risk assessment statement, and someone who is not familiar with the details might ask you that why is it rated high. You as an auditor should be able to explain with each of these points what exactly is happening and what is the reason, like why is it a 3 and why it is not a 1. So you should have that explanations ready with you. So when once we assign a rating, say for example, if we're assigning a rating high here, what happens next, right? So the next step, which we already discussed, is you define the controls to be tested. Now, because this is a high-rated control and it is a IT control, we perform all the ITGCs associated with it. So user provisioning will be conducted, user deprovisioning, user access reviews, change management will be conducted. All the entire suite of controls associated with ITGCs will be conducted. But say, for example, this rating was not high, this was low. Will it be the case that we won't be testing anything? No, we will be testing, but the scope will be limited. So we'll be maybe only testing the user access review. We won't be testing the provisioning or deprovisioning. We'll be only testing, say, user access review, and change management. Again, completely depends on the way controls are structured and the way that application is functioning. I've written a couple of pro tips here. I mean, just tips which will help you maybe perform a better risk assessment. So, just a tip is whenever you're auditing for a client or you're building an internal controls function or audit function, use the existing information or data which is documented. So, more often than not, even if the organization is you know mature or not mature, they will have some documentation in place. So make sure that you are using that to the maximum possible extent. As discussed earlier, constantly be in touch with the process owners just to understand what kind of changes are happening, and make sure that everything is current. So yeah, so that concludes the part on, I would say, the more technical side of things. Now I'll be touching a bit upon the pillars which I already discussed. So the pillars on which an effective internal control framework rests. So again, a very simple slide. As I said, key responsibilities, management and internal audit. I think pretty self-explanatory. So if you can see, internal audit is strategically placed between management and external audit. So management is obviously the first line of defense. The second line of defense, we have the assurance function, and internal audit is typically the third line of defense. And then we have an external auditor whose responsibility is to express an opinion on the company's internal controls or financial reporting. So again, specifically for the SEC reporting, but this is again common for everything. The reason I have just added this slide is maybe just to show you how strategically important internal audit is. It sits between management and external audit. It has to balance the expectations of both these parties and make sure that there are no lapses. So again, extremely important, very relevant. This is one of the more interesting slides, and I thought it would be good to add this in just so that you can appreciate the fact. Like, we talk about internal controls, but there are a lot of people involved and a lot of different teams involved who eventually help with the effective execution of a control. And it starts with an accountable executive. So if you remember my first slide, I talked about leaders taking ownership, right? What I've noticed is in both my roles at Uber and at IQEQ, we have an accountable executive defined for a control. So whenever we create a report, the accountable executive's name is the first one on the executive summary. And what is that person supposed to do? So he or she owns the risk appetite, he owns the outcome, and that person is answerable to us, to the board, and to the regulators. So he's the ultimate function owner. Just to give you a simple example, we can say the head of procurement. Say, for example, you have an issue in the procure to pay process, controls are failing. Then who is the person who is accountable? It is the head of procurement. The next set of people, the four line items which I have mentioned, they are more on the responsible side of things. So, if you guys are familiar with the concept of RACI, so RACI is nothing but responsible, accountable, consulted, informed. Accountable is the most important person because if anything goes wrong, his or her head will be in the firing line. So once we are done with the accountable executive, then we talk about the process owner. So process owner is nothing but the person who owns the end-to-end process. So someone who owns procure to pay. Simple example is procurement operations lead. That person is responsible for making sure that the controls are embedded within the process, and he or she will drive the process improvements as needed. One step below that is the control owner. So control owner is again the person who owns that particular control. So in one process there might be 10 controls, and we could have 10 different owners for that process as well. So he or she owns the risk and control objective. He ensures that the control design it fit for purpose, and if there are any remediation, then he is the first person to actually help remediate that particular exception. Again, a good example is accounts payable manager. It could differ. Again, as I said, this is just a very generic example. It differs from process. It differs from organization to organization. The next set, and it could be the control owner as well, but it is the control preparer and a control reviewer. So the age-old maker checker concept, right? So maker is someone who executes the control activity, who documents the control activity, maintains the documentation, as opposed to the control reviewer. He's the person who makes sure that the control is performed properly, adequately. He documents what is actually reviewed. So, say for example, there is a lapse and something has not been properly documented. He is the person who will hold the control preparer accountable. That okay, why have you not reviewed this? And then document that. And he or she provides the final sign off on the control. So all these different people ultimately, I would say, make a successful internal control function. And it's just for one process. There are like 50 processes in a complex organization, and the accountable executives will differ. The process owners will differ. Control owners will differ. There will be a lot of changes. Another important point here, just one key takeaway, which I thought I should tell you guys is make sure that this list is current. And this is one problem which we used to face a lot in Uber, because a lot of people used to leave, a lot of new people used to join, and the problem was that again the changes were not properly communicated. So that is the reason we had a lot of accountable executives who were no longer in the organization as well. So make sure that these lists are also refreshed, because this more often than not becomes a problem when you are assigning a owner to an issue. Like you perform the audit, everything is great, but when you have an issue, people typically play passing the parcel with each other, and it takes a lot of time to identify the right person who is responsible. So make sure all these details are documented and are current. And obviously, last but not the least, I think risk or compliance function assurance, which is the second line of defense. And our job is to only provide guidance. So, again, a clear distinction is we are not supposed to own anything, right? We are just expected to provide guidance. All the process narratives, all the flow charts, the control should be owned by these people listed above. Your job is to just provide guidance, challenge design and operating effectiveness. Now, this is very important. So, you can challenge, like if you see a control which is badly worded, or you see that if it is not mitigating the risk which it is supposed to, then you can challenge that, but you shouldn't be creating the controls for them. You can guide them on how to create a control. So I think that is your role and responsibility. So again, as promised, this is purely based on my personal experience on learnings and unlearnings. So few tips on program management. So whenever you are building the internal controls function, an audit function, and whenever you're discussing this with your stakeholders, right, few housekeeping rules to keep in mind, just to make sure that your job becomes easier. So especially in organizations which are very complicated and they have teams located globally, make sure that there is a dedicated lead for each of the business processes. Now it happens again, a common problem, a very simple but a common problem which happens is you send a mail and there are 5 people marked on that email, right? uh, and nobody sends you their documentation, because each of them again kind of pass on the responsibility. So whenever you are beginning with an audit or any review, make sure that you assign that person right in the kickoff call, that okay, XYZ is supposed to provide me with all the documentation. So what XYZ will do is he will coordinate within his team and make sure that the documentation is provided to you on a timely basis. Second, very important, and just to make sure that that clear distinction is maintained, your role as an auditor or as an assurance professional is as a trusted partner and a critical friend. You're not supposed to own anything. You are just supposed to partner with the business and with the different process leads. Process documentation, I think, extremely important. Make sure that whatever process documentation is maintained, that is up to date, and this is not taken as seriously as in many. It completely differs. I think it depends on the maturity of that organization. But whenever you are beginning with a review, obtain all the documents. So typically there are documents like flow charts or there are process narratives, right? Make sure that those narratives stay up to date, and if there are any changes, get them changed or updated by the process owners immediately, because these are good audit document. Like you might leave the organization, someone else might come in your place, but if these documents are updated, it makes their life easy. And obviously when a regulator comes to you or when an external audit is going on, then it's even more important that you have the right documentation to showcase to those parties. RACI, again, one of my favorite documents, especially in a multi-jurisdictional global organization. So you prepare a RACI, and it could be at any level. Like I could prepare a RACI for my own team as well. It could be a RACI across. So you decide the extent, but make sure that all the responsibilities are defined properly and the people adhere to it. So it's no you just creating a RACI and not, I would say, disseminating it to the right people. So it should be circulated to the right people and ensure that it is being followed in practice as well. Creation. So create playbooks, guidance documents wherever applicable, and this is more for us. So if you are building a new audit function, if you are building an assurance function, these documents are very important, because when your function is new, people don't have much knowledge about it, right? Because again, this is not something which is of primary importance. Like it won't some nobody will give audit or assurance number one importance. So you have to kind of, I would say, market yourself. And one of the better ways to do that is to create playbooks or guidance documents. Like, say, for example, again, HR payroll, the head of HR comes to you and asks you, what exactly do you do? How is your methodology designed? Then you should have a document, a presentation, or a playbook ready to give to them, that, okay, this is how we operate. These are the periods which will be coming in to actually review and do the audits. These are the people you can contact us, and this is the way the entire process will flow. So it's important to have all these documents and guidance notes wherever applicable. And it is for both of you. I think it is for the process owners as well, but it is also for you, especially if you are building a new function. Very important. Last but not the least, communicate, over communicate on the key milestones. Communication is key, and there are a lot of innovative ways to do that. So, one of the good ways I have noticed recently is to just create a monthly newsletter. So, the newsletter will tell you, okay, these are the reviews which my team did, these were the key findings, these are the issues which are being remediated, and this is upcoming. And you can also include shout outs. Like, say, for example, some process owner has been exceptional in cooperating with you, or they have a really good process. Then make sure that that is also called out. So just make sure that your function stays in the news, because it is very easy to do your work in silos and do good work. I'm not saying any one of us will do anything short of amazing work, but it's also equally important to communicate that to everyone, so that people know that there is an assurance function, there is an audit function, and this is what they are doing. Because the more inputs you will get from people, the more you will develop in your role. And the beauty of audit or assurance is that, like, again, you can't work in silos, and you need inputs from various people. Like, people should proactively come to you and tell that, okay, I am designing a new process, or I am just trying to decide whether to buy this application or not. Can you help me? Can you review this proposal from an audit lens? I think that is the real crux of how you will emerge as a better professional, and you will eventually build your credibility. And that is where we eventually want to reach to. This is again pretty simple, but I thought important to note it down here. So walkthrough is nothing but a process understanding, and if I have to again talk about it in technical terms, it is a test of design. So it is a very good opportunity for auditors to actually understand how a process operates. But there are certain tips and tricks to make sure that you utilize this to the best possible extent, because there are some stakeholders who may not really cooperate with you afterwards. So make sure that you are well prepared for the walkthroughs. And some of the ways to do that is, make sure that you do your homework before. Like, say, for example, you are again reviewing a process, screening of clients. Then if there is a policy, you study that thoroughly, you assess the risks, you create a walkthrough prep document. So walkthrough prep document is nothing but a document which is created with the main sections, contains the risks, the controls which will be reviewed against the risks, and what you want to see or discussed in that walkthrough. So when you give that level of information to the process owners, then they are also prepared. But there's another, just a tip here is, don't disclose everything. Like, disclose 99% of what you're going to discuss, but keep that 1% element of surprise. Like, if there are certain questions which you feel should be answered in real time, then don't put that on the prep document. So again, it's a judgment call. Typically, it depends on the organization or the people you are working with. Uh, there are various ways to conduct a walkthrough. I mean, I have seen been in walkthroughs where a person just explains the process and we take notes. A better way to do that is to use flowcharts. I'm a big fan of flowcharts, just because it's very simple to understand even complicated processes, because you can see how different teams talk to each other, how the entire process flows, which are the points which are of more risk, which are the IT systems which are there in operation. So it just makes lives easy. But again, this is a best case scenario. It may not happen every time. So rely on whatever documentation you have, but just make sure that you are understanding what that process owner is explaining. And make sure that all the concerned team members attend the walkthrough, because it's important for you to understand the holistic flow from end to end, and that won't come without everyone being involved. Record the meeting, again very simple, if it is allowed. Like some organizations are against it, but if it is allowed, do record the meeting, because it's not humanly possible to grasp everything what they're saying, especially if you're auditing a new process. So record the meeting wherever possible. And once you are done, then just send across a brief summary with action items as possible, so that it closes the loop and you get whatever you need in real time. Now, this is again something very simple, but something which you can use for your stakeholders. So when someone asks you, like, okay, you are talking a lot about documentation, but what does strong, reliable evidence look like? So it should focus on, I would say, all these points. So completeness, accuracy, we discussed that at length in the previous slides. So make sure that is achieved. Preparer and reviewer should be properly stated in the control execution. And many a times, I mean, this is again bit funny, but people usually put their signatures without adding their names. Now, if I'm reviewing a piece of documentation, I don't know, right, what does that signature stand for. So again, advisable to just write your name, date stamp it, so that my evidence of timeliness is also met. A clear conclusion statement, like you are reviewing an entire document, but you don't know what is the conclusion of that. A good example in that case is, say, for example, I'm screening for a client, right? There's a client that I'm screening. There's a screening control. I can see that there was PEP identified. So PEP is nothing but a politically exposed person. So there's typically a process known as discounting of hits. So you take a deeper dive and try to see if if that client is really related to a politically exposed person, and to what extent. So that entire mail trail or that entire research trail should be documented. And what is the final evidence? Are we keeping the client or are we exiting the client? So that should be properly documented. Just an example for you to understand. Wherever you are reviewing any control where there are exception thresholds or escalation criteria, those should be properly evidenced onto it. The last is the linkage to the source system. So what we discussed beforehand, right? Whenever there are multiple reports which are culminating into one single report, then it should be systematically written and evident that, okay, we are using XYZ systems, XYZ reports, we are applying particular human processes, like we are applying a pivot, we are applying a VLOOKUP, and this is the final output which is coming out of it. So again, like again, I'm saying this is very simple, but I've hardly seen a piece of evidence which satisfies all of this. So thought it is important to note this down. This I think we have discussed, but I'll just briefly touch upon it. So, what do you need to do? Like again, this is especially for cases where you're building a new function, right? So make sure that controls are integrated into business as usual workflow. So it should not be the case that you are implementing or suggesting control just for the sake of it. Just remember one thing: people have their own day jobs, so implementing and executing control should not be a burden to them. So make them understand that, okay, this is a point where we feel that a risk could materialize, so let's have a control and let's implement it in such a way that it is simple but effective. So if you align the controls to the right process steps and the right decision points, then it's very easy and feasible. Because it might be the case that if the control is too complicated or if it is requiring too much of time, then the business may not adopt it. So you have to be very smart in even suggesting controls, obviously designed for risk but not only for compliance. Like, just because my policy says that I have to have XYZ, Do we really need XYZ? Is it relevant now? That question should always be answered. Use system based controls. I think this is the best case scenario. Not all organizations are tech savvy and not everyone has reached there. But obviously, this is the future. Like, we should be using more system based controls, because that way we will be utilizing our efforts in things which matter the most. I mean, again, just simplistic example, right? Say we are auditing a terminations control. If we had a bot designed, or we had some automation design which kind of takes the list of all the terminations from HR and the list of users from the Active Directory, then you can actually match those. The bot can match those, and the ones which have still not been deactivated just give you those names. So that again is a best case scenario, but we are yet to reach there. So I'm just saying this with caution. Last but not the least, ensure clear ownership accountability. Goes without saying, things really get complicated if the ownership is not defined. And I'm not making this up. I have spent like almost 2 to 3 weeks just identifying the right owner and making sure that they are accepting the actions upon them. So make sure all of this is decided at the very beginning, and keep on reiterating that at regular intervals. This again, I won't repeat. I think it's kind of an extension of the previous slide. This I think is important. I'll spend a couple of minutes on it. Now we have talked about a lot. We have talked a lot about internal controls, why they are important, scoping, risk assessment, all good to have things. But it boils down to what actually happens. And this slide I think sums it up. What actually happens and what actually works. So whenever you are interested with the job of building a function, right, an internal audit or a risk function, assurance function, ask a simple question: why are we doing this? What is the risk that you see, and what risk am I supposed to mitigate? The same way we do a risk assessment for processes, do it for your own function. And when you answer that question, and when you get the right answer for that question, then you have a particular purpose. So you're relying more on purpose and not on structure. I've touched upon the second point, like building credibility before complexity. So credibility, I think, is very important, and it takes a lot of time to build. Uh, I won't sugarcoat this. It takes about a year or even more than that for people to actually trust you. And it typically happens when we are young and we are in our initial couple of jobs. Obviously, we have studied, we have our own professional credentials to our name. So we are pretty excited. We go on all guns blazing, but we kind of overlook the fact that the business is a business. It operates in a particular way. The stakeholders have their own ways of working. So when you initially start building a function, start slow. That would be my suggestion. Start slow. Don't expect perfection right from day one. Things will take time, but things will take time. And once you build credibility, things will become much more easy for you. So just focus on doing your job, deliver high quality reviews, be very humble in your approach. I think that is one thing which I would really like to emphasize. Like, you might be knowing a lot, but you don't know everything, so just keep that in mind. Understand the business, understand how stakeholders operate, understand the different terminologies which are used, and those differ from organization to organization. Another thing which we do in this organization is we even issue positive assurance reports. Like, if we audit a process and we notice that it is really working well, we actually issue a positive assurance. So that gives confidence to the business as well. Third, again, I have spoken about it at length. Be risk driven, not checklist driven. Your focus should always be risk. Just because my checklist says I have to review 10 points, not necessarily you have to review them. So, if it is risk based, then keep that in mind. The fourth point is invest early in people and mindset. So this is more for folks who are building new teams. And uh, I've noticed a very positive trend, I would say, in the last 1 year or so. The number of GCCs which are being set up in India across all major cities, that is phenomenal. And these GCCs are not only the back offices. So it was a trend, I would say, 10 years back, where we used to get, say, okay, 10 controls, you test that. Now that is not the case. Global teams are actually being formed from these GCCs. So you're actually leading a global team. My team is an example in this case. And there are many like mine. So when you're hiring, just make sure you're hiring the right people. Hire someone who has the right attitude. Obviously the skill sets matter, but skills can be taught. Just hunger, I would say hire for curiosity, hunger, judgment, and good communication. So take some time in hiring, but hire the right people, because these people will be the founder members for your organization. Keep reporting simple, honest, and action oriented. Evolve continuously. Don't aim for perfection. Perfection is just a myth. Do your best and be honest in your work. I think I just skim through this quickly. I think I'm running a bit short on time, so I just skim through this. So I think cybersecurity. So I just want to touch upon a couple of big rock items, or the things which will be focus, which will be of primary focus in 2026. So cybersecurity goes without saying. We have seen the number of attacks, cyber attacks, which happened this year, and this will only increase. Data breaches very frequent. The impacts which it has are catastrophic. You as auditors need to, not as auditors, I would say, as employees also need to follow cyber hygiene best practices. Make sure that all your application, you know the IT framework for your organization. You know which application speaks to which application. All the right control should be in place. Always apply the principle of least privilege. Periodic access reviews, the GITC should always be spot on, so no excuses there. Artificial intelligence, I think I will take a couple of minutes because this is the buzzword, and I don't think my presentation would be complete without touching upon this very, very important topic. So, artificial intelligence, I think everyone is talking about that, and it's very rampant. I think the scale with which it has grown is far, far reaching, and it's great. I mean, I won't deny the effects of this. It's phenomenal. I think the efficiency of work has increased for everyone, and things have really simplified. But one problem which I notice is what people are doing, what auditors are also doing. And I think there was a case a couple of months back in which a very renowned organization, auditing firm, actually used ChatGPT or some AI tool to publish a report, and it became common news, and it's a massive loss of trust, right? So just a couple of key points in this is, make sure that use AI, use it as an enabler, but don't let it replace your thinking. Don't outsource your thinking to AI. The final decision maker should always be with you. But the tasks which are pretty mundane, or if you have to do any research, then I think AI tools are great. But when it comes to, you know adopting a professional judgment or assessing the extent of risk, keep that trump card with you. Because if you don't do that, then it will be a lot of problem for the profession as a whole. Because if a renowned organization can do it, then it's very likely that a lot of people are doing it across. So just make sure that you're using AI intelligently, but just remember that your knowledge, your audit acumen, your experience, your expertise will always triumph over AI any day. So just keep that in mind. I think data protection, privacy. We recently had the DPDP Act, and there are a lot of discussions around it. So make sure that data is accessed on a need to know basis. Classification practices should be strengthened. Make sure that you're storing data only where it is required, and follow good retention and deletion practices. Regulatory compliance risk, I think I've spoken a lot about it. Just make sure that you know what is happening when it is happening, and be proactive. Typically when a new regulation comes into effect, there is a period of time till which you can actually implement that. So make sure you are proactive in your approach, and audit readiness is done for all these regulatory and compliance risks or the new regulations which are coming into force. Um so executive presence, I will just maybe, so as I was telling, right, like all of this is great, but it won't be of much use till we know how to communicate. So, in the interest of time, I'll just skim through these points. So, first and foremost, know your audience. Know to whom you are presenting. It could be to the board, it could be to your stakeholders, it could be to the steering committee. So, the level of detail which your presentation holds, that should be dependent on the audience. Use dashboards. I think people relate more to dashboards, more to pie charts, bar diagrams rather than lengthy verbiages. Less is more. Keep things simple. It is not a literature contest, so avoid too many words. Use the language which the business uses. So that is a good trick for them to be more accepting of what you're suggesting. Keep an open mind, be receptive to feedback, work on the suggestions given, and try to improve continuously. Reporting tools, I think, just one key takeaway is there are a lot of reporting tools available in the market, but it completely depends on your organization, your needs, current and future. So don't jump into buying anything or implementing anything before understanding its usage first. This is just one step on report writing. I think report writing is something which is really important, and which I think this is a skill which all of us need to develop. So typically, a report consists of three things. So we have an executive summary, we have the details of issues raised, and we have a closure criteria. So you can refer to this slide later on, but I just want to highlight a couple of things. Like whenever you are writing a report, and you can be from the internal audit world or from an assurance world, think of your report like a story. So it should be logical, engaging, and understandable for someone who is not familiar with the subject. So even if I give my report to someone who doesn't understand what is happening, he or she should be able to understand what exactly is happening, what is the risk, and what is the closure criteria. So your report should tell an entire story right from the beginning till the end. And there are various ways to write a report, but typically I'll just focus on the middle portion a bit. So report should typically contain the issue rating. It should have a background, like what exactly happened, why it happened, what is the root cause, what is the impacted area, what is the control type impacted, and is this a repeated issue. I have added these last 3 4 points specifically on the thematic classification, on the control time impacted, on the recurrence indicator, because whenever you, again, as you mature in your function, right, people or the management or your CEO will be more interested in, then okay, you notice 5 issues in Mauritius, 10 issues in Switzerland, but holistically, is there any theme which you're observing? Like say for example, I'm noticing a theme that the reconciliations are not being performed timely. Now, is this a theme which is across the organization, or it is particular to a specific cluster? So once you have all these details in one report, you can use AI, or you can do this manually as well. You can have a more thematic analysis, and that is the level which the management will be interested in it. They're not interested a lot in standalone issues, but more on things which are all encompassing. So just something to keep in mind. A closure criteria is nothing but the actions which you are suggesting to the process owners, which will help mitigate the risk. Now it is their responsibility to actually, formulate a plan for that. Management response, I think, pretty standard, and validation approach. Like how will you test it? How will you make sure that that issue is properly remediated? And again, I've noticed this, like we perform good reviews, we issue great reports, but one area which typically people falter is issue assurance. So you are issuing a report, you have 5 issues, and you need to make sure that those are actually being addressed, like those closure criteria are being met and that risk is properly mitigated. So this is very important to note, so that your review is complete. So everything right from the scoping stage till issue assurance, that is your job, and that is what you should strive for. Great. I think I'm just in time. Sorry for the last minute rush. I would just like to leave you guys with a couple of final thoughts, right? And first of all, thank you so much for your patience and for your time. And again, a massive thank you to all the dignitaries. It's been an absolute pleasure. I think it's a great way to end the year. I would just like to say that I absolutely love what I do, and I think that internal audit or assurance is one of those things which keeps life interesting. I mean, you get a overview of all the different functions. You understand how things operate, how a business operates, and you get to work with a lot of different stakeholders. You interact with a lot of senior folks. But a part which I love most is that the processes which you design, the controls which you put in place, that outlive you as well. Like I might leave this organization, you guys might leave your organizations, but a control which you have set in place that will even outlive you. I think that is really a great thing, because the things which we set in place, those will always be there. And I think that is one way to be really grateful that we are a part of this great profession, and we just need to do our best, work hard, be curious, be humble, and just enjoy what we do. I think as long as we enjoy what we do, internal audit will always continue to reward us with the best. Thank you so much again, and wishing you a very happy, prosperous, blessed new year in advance. Thank you so much.
Thank you, Piyusha. There are a few questions that we have received from the participants.
Sure.
So I will just take a few of them. One of them is from Vikas Kumar Dwivedi. Is there any application used for risk management or internal controls? Is what he's trying to ask.
Yeah, that's a good question. And I think there are a lot of applications. So, if I have to talk about one, then there are a lot of customized tools which can be created in Power Apps. Then we can use Alteryx. If your organization has the capability, we can use Python as well. And this is more for the risk assessment part of things. If you are talking only about, like, say, storing your work papers or even performing the testing, then there are applications like Audit Board. I have used Audit Board extensively, so I can vouch for its effectiveness. Then, if your testing is not as intensive, then you can even use Wdesk or Workiva. I don't remember the exact name, but yeah, there are a lot of different applications. But again, a point of caution is make sure that it caters to your organization's risk appetite and cost as well. So do that cost benefit analysis and make sure that it's fine.
Okay, one more question is I think you have addressed this, or what is the difference between IPE and IUC? Is what someone is trying to ask. I think it's not elaborative enough, but if you can.
IPE and IUC, right? Sorry, I don't have the exact answer to that. I'm sorry.
Okay. I think you had a slide based on information prepared by the entity. So I think IP is that. But I don't know IUC. I didn't come across your presentation. So maybe.
Okay.
Uh, okay. And I think this is a question or a statement. In the old mindset of internal control, it's said to be more documentation oriented, and in the new regime, more emphasis is again laid on document. Okay, this is just a statement. Okay, I don't see any more questions across here. But definitely, I would like to take this opportunity to thank you. So, on behalf of all the organizers and our participants, I want to thank our speaker, esteemed faculty, and for giving us, taking us through this highly insightful and practical oriented session. It comprehensively covered, I think, risk assessment information prepared by the entity, financial statement assertions, control responsibilities, evidence expectation, and you also gave a lot of implementation guidance supported by relevant real life illustrations. So, also the emphasis on cybersecurity risks, artificial intelligence, and automation risks, and a clear message that primary assessment and professional judgment should not be outsourced to artificial intelligence tools was particularly impactful as people tend to overuse it. And also your guidance on effective report writing, which includes clear executive summaries, logical issue articulation, root cause analysis, and more of it should be like a story, and the closure criteria. And you also added certain significant value by the executive presence. So, on behalf of all the participants, I would like to thank you, Piyusha, and thank you to all the participants also for your active engagement and sending in your questions and few opinions on the panel. And thank you to Internal Audit Standard Boards for arranging this seminar for the webinar for benefit of all the members. So thank you all of you.
Thank you so much. Thank you
Thank
so
you.
much. Bye bye.
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 Nisarg, exit.